Hey everyone, welcome to this video lesson. Today we're going to be talking about broken wing butterflies. So we're going to go over kind of the setup, what it is, and then we're going to jump onto the platform and show you an actual real life example. So let's jump right in. So first off, what is a broken wing butterfly? You might see it also called a skip strike butterfly, and I'll show you why when we get to the platform. But the main reason that we do a broken wing butterfly over a traditional butterfly is that we want to reduce or eliminate risk in one direction, okay? And then lastly, with a typical traditional butterfly, we usually pay a debit to put that trade on, and with a broken wing butterfly, if you're eliminating the risk in one direction, you're actually going to receive a credit when you enter the trade. So here's the setup. By the way, broken wing, BWB stands for broken wing butterfly. I have a good friend of mine, trader, and he trades a lot of broken wing butterflies. In fact, he usually doesn't trade traditional butterflies. He only trades broken wing butterflies. And so he always says, I like my butterflies like I like my women, big, wide, and beautiful. So every time I see BWB, sorry, that just came to mind, so I had to share with you. So you can call it a broken wing butterfly, you can call it a big, wide, beautiful butterfly, whatever you want to call it. But here's the setup. So you want your market assumption to be neutral. You want implied volatility to be high. Optimal time frame to enter, 30 to 60 days to expiration. Profit target, 15 to 25%, and that's of the total capital used or the risk associated with it. So you want to make about 15 to 25% return on capital. Downside risk is defined, upside risk is defined, and your probability of profit at entry typically ranges in that 35 to 50% range. So here's the trade setup. And don't let this confuse you. When we go to the platform, this looks a little bit confusing, but when we go to the platform, I'll show you how to do it. It's actually a pretty simple trade. So the setup is just like a traditional butterfly. We're going to sell to at the money calls, and then we're going to buy one in the money call and buy one out of the money call. So as a note down here, I mentioned you can use all calls or all puts. In this example, we're just using calls. So typically what I like to do is I like to set it up like a traditional butterfly, and then adjust one of the long calls closer to the money to reduce or eliminate risk on one side. Okay. Last note, and we'll jump onto the platform, is time decay. The theta is positively affects this position, so it's a theta positive type of trading strategy. So let's go to the platform and take a look. Let's set one up on SPX as our example, S&P 500 index. We want to be in that 30 to 60 day range. 49 days is perfect, kind of right in between there. So we're going to go over to the call side first. And just like you set up a traditional butterfly, you're going to go right at the money. So price is trading at 23.66. Let's call it 23.65 is the closest at the money strike. So we're simply going to right click, buy butterfly. And then just like we do when we set up a traditional butterfly, we want to expand those wings because it defaults to the next wings, the next strikes over. So what we want to do is we want to take a look at the expected move, which in this case is 86, or we can round up to 90. And then we want to put our long wings, the ones we're buying, the strikes we're buying, we want to put those just outside that expected move. So call it 90. So on the downside, we'll look at 22.75. So we'll pick the 22.75, and then on the upside, we will pick the 24.55. 24.55. Okay, so those would be the strikes that we want to look at initially. Then let's just right click and analyze that trade. And so this pulls up a traditional butterfly, right? So Just move these slices to break even, and you can see our probability of profit at initiation a little over 40%. Okay. So then what you want to do to make it a broken wing butterfly is, remember, the whole goal of a broken wing butterfly is we want to reduce or eliminate risk on one side of the trade. So remember, we've got this nice big tent, we've got this nice window that price can go around in, but if we have a decent sized move, we have risk if it blows out to the downside or if it explodes to the upside, right? So what we can do is we can move each one of these, or we can move one of them at a time to eliminate risk on one side. So to decide which strike will eliminate that risk, let's do it on the downside strike first and move it, which is now at 22.75, right? Like we have there. 22.75, so that's our downside strike. So we need to move that closer to the money, okay? And how do we know how close to the money to move it? Well, you can basically look at where the break even is, and you can take the strike that's just above the break even. So the break even's at about 23.12, so we could go to the 23.15 strike, and we know that that's going to eliminate our risk to the downside. Okay, so let's change that to 23.15. And then unlock our little price lock here. And actually price is moving around, so we actually need to move it up maybe one or two more. So we're gonna move this from 23.15 to 23.20. Sometimes you just gotta mess with this a little bit. And let's actually, so you can see it's significantly reducing risk on this side. But when I do it, I like to completely eliminate the risk to one side. So let's just move it up one more to 23.25, and that'll definitely take care of it. Okay. So now what's happened is we've eliminated risk to the downside. Okay. So here's where price is currently. If the S&P 500 were to tank and go down, we still would make $315 on this trade. So that's the minimum profit that we can make to the downside on this trade. Okay, we still have the risk to the upside. Total risk is $4,685 on this. SPX is a big product, big symbol. So we've got that risk to the upside, but we have no risk to the downside. In fact, obviously our optimal profit area is right at the peak here. But if the S&P tanked to the downside, we're going to make at least, well, 325. So I got to lock this back up so price doesn't change around on us. So 325 would be the least amount we can make from here to the downside. Okay. You can do the same thing on the upside, but let's first take this strike and put it back where it was, which was 22.75, I believe. Unlock that. Okay, so this gets us back to our traditional butterfly. We can do the same thing on this side. So we just want to move this upper strike, which is at 24.55, and we want to move it closer back to where price is and inside of the break even. So let's just try the 24.10. I think that'll get it done. And one more in, 24.05. There you go. So now we've eliminated risk to the upside. And if the S&P 500 were to explode to the upside, regardless of how far it goes, you can see, let me lock this up so the price doesn't move. You can see we're still making a profit of $75. Okay. So we've eliminated risk to the upside. So you can either eliminate risk to the upside or to the downside, depending on your market assumption. And you still have this big tent, this big peak in the middle here. Okay. So I hope that was helpful. If you have any questions, shoot us an email or leave comments, and we'll be happy to answer. Happy trading. Talk to you next time. If you'd like to learn more about the different strategies that we use to make consistent returns, come see us at NavigationTrading.com. We've got a ton of free resources, including the navigation watch list, which is a list of the most profitable symbols to trade for each type of strategy. We've got the volatility indicator, which you've seen on my charts. You can download this directly to your thinkorswim trading platform. And we've got a free options course called Trading Options for Income, which is a step-by-step guide to get you making consistent trades right away. We look forward to seeing you there.